everyone, and thank you for tuning in to the update with Oakwood Financial Group. I'm Joshua Dobie. Thank you for continuing to embrace this medium of updates, especially during this time of COVID-19. I would like very much to be sitting with you in person, but in many ways, it's prudent for us to be able to connect with you through this video medium, and I appreciate so much your willingness and your patience to embrace it in this way. A lot has happened since our last update. We're obviously not going to get into all of the tiny details, but if you'd like to chat about anything that we're discussing here on these updates in further detail, please never hesitate. You can always call us at the office. You can always send me an email. I always enjoy hearing from you. So please never hesitate to do that. All right, let's dive right in. Like I said, a lot has happened here over the last couple of weeks, and even as we're looking out a couple of weeks, we're sure a lot of things are going to be happening as well, especially legislatively. We'll talk about that in just a few moments. Time of this recording, pretty impressive numbers that have come through from an unemployment standpoint. And I mean impressive in a positive way and also in a not so positive way. Impressive from the standpoint in a not so positive way in that we eclipsed again over 1 million new unemployment claims this week. Again, not a reason to be happy, but on the glass half full way of thinking about things, it's continuing to decline. And actually, this is week number 6 of unemployment claims declining. Again, not a reason to get excited, but from a trend standpoint, something that we're watching closely here and thankful for that. That probably is due to the Small Business Association loans and relief packages that have been put through in some substantial ways. But there are a number of variables involved with that as well, and it's good to see at least some positive movement there. Linked to that, the number of continuing unemployment claims. Again, not a reason to get excited. The number is still north of 17 million in terms of continuing unemployment claims, which means folks who are already on unemployment insurance. However, with a peak out over 25 million here just several weeks ago, we are continuing that downward trend in terms of the number of folks who are on unemployment insurance. Again, take it in context. It's not a reason to be rejoicing by any stretch of the imagination. However, the trend seems to be getting more positive than where it was previously. And so those are the kinds of things that we're watching there. Couple of other things to keep in mind as well. Market-wise, we're seeing all kinds of stuff. And frankly, it's like looking at a soup in a pot in that everything is kind of getting all meshed together. But if you separate out the pieces a little bit, it's actually a tale of two cities, if you will, or a tale of two markets. On the one hand, we have a number of industries which continue to be decimated, and they are going to be in a very challenging place for an extended period of time. You could probably say them along with me. Airlines, hotels, sports and entertainment, basically anything that has to do with gathering of large crowds. Then when you also add in the energy sector, because of the recent just fallout in oil prices, that's the collection of industries over here, and add in the financial sector, unfortunately, which has just had a very challenging time. Sometimes, if we're wanting to be very quick about it, we say these are basically the value stocks or the value end of the investment universe. And then over here in the growth end of the universe, but not even all of the growth end of the universe, a very small segment of it, you see some stocks that are doing very well. Some of these names are going to be very familiar to you. You probably have heard them time and time again. Amazon, Facebook, Netflix, Google, all of those kinds of things which have actually done quite well during this time of COVID-19. Now, it's very important to keep in mind that those stocks that are doing well comprise a very limited sleeve of the overall investment universe. However, because of how our indexes are constructed, and I'm thinking most especially of the Dow and the S&P 500, just because those tend to be the most widely watched in terms of what's happening, it's very important to remember the Dow is price sensitive or price weighted, and the S&P 500 is market cap weighted or market capitalization weighted. Now, what does that mean? Basically, the more expensive stocks in the Dow have a higher weighting and they move it faster. So whenever you're looking at something like an Apple, or whether you're looking at something like United Health, those are going to move the stocks much more than, say, like an AT&T or Verizon. Same with the S&P 500, but it has to do with the size of the companies. So again, coming back to the biggest culprits, Amazon, Apple, the biggest companies in the world, when those companies move in terms of both positive and negative movements, they're going to have, in my opinion, almost an unnatural influence on how the index moves. So what I'm saying is it can be a very small number of stocks both in the Dow and the S&P 500, which are moving those indexes, especially during a time like this. I say this just to give it as a couple of points of information. Don't want to get unnaturally tied into what the indexes are doing right now. But sometimes when folks say, well, the markets are doing great. Well, maybe. Or the markets are doing terrible. Well, maybe. You really have to peel away a couple of layers of the metaphorical onion, if you will, to dig a little bit deeper and understand what exactly is happening. And obviously that's what we're doing here at Oakwood all of the time. So market-wise, again, a lot like a soup right now, coming back to another metaphor, a lot like a soup right now, a lot of mixing in terms of what's going on. We're going through earnings season right now. And as we would anticipate, as you're looking at some companies, they have some very negative forward-looking earnings, and some other companies which have some moderate to even positive forward-looking earnings. So we're continuing to evaluate those, trying to understand not only where we are right now as the result of the economic impacts of COVID-19, but what does the fall look like? What does the winter look like? What does it look like when we come to 2021? And that comes into, or leads into rather, one of the most powerful variables that we feel is sitting out there, and that is the whole strategic move towards how we have the go back to school, go back to college, and go back to university experience. I don't need to tell you, and many of you have been involved in education or are involved in the education end of things. I don't envy you at all. That is such a monumental kind of decision, and frankly, I don't know if there's a right answer to it. But we're looking at it obviously in the tiny sleeve of economic and financial impacts. Here's just another little data point to keep in mind. In this country, single parent homes where the single parent works, or a double parent home where both parents work, that comprises over 22 million families. Let me say that again. Single parent home where the single parent works, two parent homes where both parents are working, comprises over 22 million families. You don't have to do the math very long beyond that to understand you're talking about a significant portion of the entire country that is literally going to be impacted by the go back to school, go back to college, go back to university choices which are made. We're having a lot of conversations all around the country right now, and as of the time of this recording, we just had word from Los Angeles County and San Diego County in California, who have essentially said relative to their primary and secondary school experiences, it's going to be all but e-learning, meaning it's going to be almost completely e-learning. We've talked to some other folks in more of the Midwestern states who are going to try to do more of a hybrid model, and even some who are going to do a normal 5-day week on campus. But they're going to have masks, and they're going to have hand washing stations, and they're going to have other social distancing measures in place. And then there are a whole bunch of states and frankly school districts and colleges and universities who are still in the throes of making that decision. You probably have heard as well, if you pay attention like me to this kind of stuff, watching what football season is going to look like. And I don't mean to belittle this at all, because it's one thing if you're talking about just getting together for, a little game of catch in the backyard. But when you're starting to talk about Big Ten, Pac-12, and SEC football, you're literally talking about economic impact in the billions with a B. And so we're starting to see how some of the restrictions are being declared in some of those instances. And again, the go back to school idea, we're looking at it here at Oakwood from an economic standpoint in terms of, okay, if mom and or dad or both are working and they're not able to be at home, but children are needing to be at home from an e-learning experience, how does that impact their ability to work? And then multiply that, again, as I just shared that data point with you, times 20 or million or more, and you're talking about a very significant impact on our economy. I'm not wanting to be too much of a doomsday scenario and say it's all going to be bad, because frankly, over the last 4 or 5 months, a number of companies, and when I mean a number, I'm not talking about single digits, I'm talking about hundreds of companies have figured out, even though they wouldn't have chosen this circumstance, that a lot of what they can do can be done with a significant, if not complete section of their workforce working from home. They wouldn't have chosen to be in this space, but they're figuring out how to do it in this space. So I'm not wanting to be unnaturally negative and say that it's all going to be a terrible scenario. What I am going to say, though, relative to, again, this going back to school standpoint, is it's going to be different. It's going to be some good, it's going to be some bad, but the whole thing is going to be different. And so we're watching that very closely from an economic standpoint, obviously with regards to the portfolios that we're managing on your behalf, to see what that's going to look like from an economic standpoint. What are going to be the strong points? What are going to be the not so strong points? So we're watching those things very closely here. As I mentioned to you a number of times before, we bottomed out there in terms of the most popular stock indexes on March 23rd. We've had a huge move out over the next couple of months. While I'm very thankful for that, and I'm sure you are too, as you're looking at your second quarter statements, that also is unnatural. And so it wouldn't be surprising to us at all if we continue to experience some significant level of negative volatility here as we move into both the third quarter and the fourth quarter. Doesn't mean that we think the floor is going to drop out. It just means that it's just as unnatural for things to go straight up as it is for them to go straight down. So just be aware of that, just be mindful of that. If you'd like to speak about your particular situation or chat through some of the thoughts for your particular portfolio, like I said, always give me a call, always send me an email. I always enjoy hearing from you. Well, as you know, whenever I've come to the end of the things that I have to say, I like to be respectful of your time and let you get on your way. But just before I do, please hear from me again how thankful we are for all of you and how much we pray and hope that you continue to be safe and healthy where you are, especially during this dynamic time. And as I mentioned, never hesitate to reach out for any reason. If you just like to chat about the markets, about football, or anything else for that matter, I always enjoy hearing from you. Well, friends, again, thank you so much for your time. Until the next time, I'll look forward to talking with you soon.